Speaker, I rise in opposition.
Please proceed in opposition.
Speaker, I rise in opposition from two perspectives. The first, from the study that was done by the Federal Reserve of Boston, and I'll just review that because I basically have said this previously. And secondly, from the perspective of the Hawaii bankers, our own bankers, and what they feel about that. First, in review, is a reminder to this body that this is not an FDIC bank that would be guaranteed by the feds, by the nation. This would be guaranteed by the taxpayers of Hawaii if anything went wrong, because the intent here is to buy basically toxic mortgages and those people who have not been able to keep their house. The second reminder is that there's only one state bank in the whole nation, and basically the state banking is a third world phenomenon, and I think we had some discussion about China on the floor in that regard. The other point was that even though the Bank of North Dakota began in 1919 at a capitalization startup cost of $2 million, the extrapolation and the equivalent of that in today's dollars for Massachusetts was $3.6 billion. Speaker, where are we going to have $3.6 billion? Even if it's half of that, the cost for starting up is tremendous. The other reminder of the study that, again, this is not me talking, the Federal Reserve Bank and their study center said that the governance model that is used in North Dakota, if we replicate that governance model, the commissioners are three, two of which, one is the governor of the state of North Dakota, and the second is the Attorney General. Mr. Speaker, if we follow that, that puts Mr. Louis and Mr. Abercrombie front and center. And the other thing they said about governance was the budget of the Bank of North Dakota is actually funded by the legislature. That's us if we follow their model. The last point, Speaker, was that we tend to think that this would be a great shot in the arm because of the economy of North Dakota is one of the leading economies, and it's like 3.3% unemployment. But the study went on to say that that's basically because of the oil extraction industry that has caused this to happen. So my sense is, if we think this is a savior, we're I think, going to be sadly mistaken. That's the first perspective. That's just basically a review. Now, bringing our bankers' perspective front and center through the testimony of the Hawaii Bankers Association, I'd like to recap a couple of the points that they make. And remember, this is First Hawaiian speaking, this is Bank of Hawaii speaking. These are all of those who represent our constituents, basically, and who we are as a state wanting to start out and put a state bank in place to compete with them. First of all, as bankers, they would like to see a business plan. And I know the sister bill of this that came up yesterday was the, quote, the task force. But they say that, well, there's not really a plan to do this. There's an idea. And bankers like to have numbers and logic before they move on anything. But particularly bankers like to know, how are you going to collateralize this? How are you going to actually fund it? So without a funding source, they're at a, I guess, at a questioning position. How and when and where $3 billion, or if even it's $1 billion, even $500 million to start this thing up, if we're going to buy thousands of toxic mortgages. They again report that this is state liability, and can the state, with its bond rating now, actually afford to extend credit out in such a way. I want to read word for word the notion of a policy conflict, which they mentioned in their testimony. They said that there could be a potential public policy conflict of the bank's mission, this is the Bank of the State of Hawaii, of doing social good, it's instead running a sound bank for profit. The potential exists for politics to influence lending policies that lead to lower quality loans with increased likelihood of non-payment. Mr. Speaker, of having worked in the third world with the United Nations for a number of years, I know for sure state-owned banks are influenced by politics, real influence, and this is a real possibility. If we're voting on a bank and our elected officials are running the bank, assuming that we follow that model, we are mixing dangerous elements together. They also said tying up public funds incorrectly may be a problem. And I want to read what they mean by this. It is a fundamental error to match short-term assets, that is operating
Mr.
income.
Speaker.
Representative Singh.
May I use my time?
So ordered.
Please.
Representative
Speaker, you're a gentleman and a scholar.
Representative Ward.
Thank you.
Please proceed.
Thank you, both speakers. It is a fundamental error to match short-term assets, that is operating income, with long-term liabilities, for example, 30-year mortgages. Unlike a bank that has short-term and long-term assets, as well as short-term and long-term liabilities, a state bank will have short-term assets, and thus buying long-term liabilities may not be in the best interest of the state. Generally speaking, these mortgages that are intended to be bought are long-term liabilities, Speaker. They also note unfair competition. What about a bank of the State Bank of Hawaii, which would have tax-free status and not have to comply with costly federal regulations? That's really a leg up, because federal regulations are getting more and more onerous since the Great Recession. They brought up a question, will we be bailing out toxic lenders? I translate that into will we be bailing out basically Wall Street, which was already bailed out? Helping subprime loans is very risky, Speaker. And let's face it, there have been a number of liar loans where people made up their income in order to get this, or even some of the people taking the applications made up the income. And the intent of this bank is to buy those loans. Speaker, that's very, very risky. And if we're going to bail out the bailout, we have to be a pretty rich state to do that. Lastly, the bankers feel that the existing loan programs that are out there are sufficient to cover this. And because of the precarious economic position and the precarious state budget position, this is probably not the best thing to do. So in conclusion, Speaker, the bankers on the East Coast, the Federal Reserve, did a study. The Massachusetts people looked at the study and said, whoa, we're gonna make a mistake if we do this. They backed off. The study is only fresh from May 2011, so this is not ancient data. So if we are looking at reinventing the wheel, we then, if we can't trust the Boston bankers, look at our own bankers who are saying, guys, this is probably not a good idea. It's probably not a good time for doing it. It's probably not a good time for using taxpayers' money. So, Speaker, I say let's not reinvent the wheel. Let's be wise on what our colleagues have done and not have to go to the moon to prove it's there. Thank you, Speaker.
Thank you very much. Thank you for your comments and the review of your previous comments. Representative Fontaine.
Please note my no vote, Mr. Speaker.
So ordered. In opposition for Representative Fontaine. Okay, Representative Ching.
Thank you, Mr. Speaker. My no vote as well, and additional written comments.
So
Thank you.
ordered. On Standing Committee Report number 621-12. Okay, Representative Suki.
Yes, Mr. Speaker, strong reservations, and we would have the remarks of the representative from Hawaii Kai as my own.
So ordered. Reservations for Representative Suki. Representative Thielen.
No vote, please.
So ordered. Okay, Representative Revere, followed by Representative Marumoto.
Opposition.
Please proceed in opposition.
I'll be brief. I often talk to people in the district, and I would encourage every member in this body to go out and ask people what they think about a state bank. And the response is consistent, and it's strong, and it's every time in opposition to this. I think people intuitively know this is a bad idea. So before it gets to third vote, please ask folks and see what they say. Thank you.
Thank you very much. Representative Marumoto.
Mr. Speaker, I am in opposition to this bill, and note that the Attorney General announced a federal program that will go into effect that brings $71 million to address our mortgage problem here in Hawaii. And it will help us with many of our underwater mortgages. I'm hoping that we should, this program will be beneficial to many of our homeowners. I think we should wait and see how this program will help before we go forward with this measure. Thank you.
Thank you very much. Okay, Representative Johansson.
Thank you. A no vote with written comments, please.
So ordered.